Hi, this is Paul Drinko with Prosperity Coaching Associates. I wanted to talk to you today about a day that's coming up very soon. That's April 1st, or April Fool's Day. And I wanted to read you a little something that I picked up that I thought was appropriate for the day. And that is that in 1996 was an April Fool's joke was played by the company Taco Bell. There was an April Fool's ad taken out in one of the largest U.S. newspapers saying that a fast food restaurant chain called Taco Bell had taken out and actually had bought the rights to naming the Liberty Bell and were renaming it the Taco Liberty Bell to reduce the country's debt. And of course, they renamed it the Taco Liberty Bell. Well, thousands of people called in. They were outraged at this. And it was revealed at noon that it was an April Fool's joke, and that also White House Press Secretary Mike McCurry responded that the federal government was also selling the Lincoln Memorial to Ford Motor Company, and they were renaming it the Lincoln Mercury Memorial. The point is, April 1st is coming up here very soon, and it creates illusions. People create illusions for people with reality. And there's also another illusion out there that investors have, and that is that there is some place they can find where they can put their hard-earned money and they can get tremendous, outrageous returns and not take any risk. And that is an illusion, because I got news for you, it does not exist. The real, what people are looking for is, let's look at this as an example. If you put your money in a CD these days, as a money market, in a savings account at a bank, you're going to get less than 1% interest. Now, you have no risk of losing any of your money. But on the other hand, with inflation running 2, 3, even 4%, you're losing purchasing power every single month. So there is a risk there. Money's safe, returns going to be limited. On the other end of the spectrum, if you go to the stock market and you have a much greater chance for a greater return, but for example, and by the way, historically the stock market's returned a little over 8%. But for example, one of the largest funds, that actually at one time was the largest fund in the world, in 2008 actually dropped 49% of its value. So there's principal risk, but you also have the chance for a much greater return. Now historically, and that fund has come back substantially, by the way, but over time the stock market has been the greatest producer of wealth in the world. So what's the right way to be in it? What's the right mix of risk and reward? Well, the best mix is a well allocated, well diversified account that rebalances periodically, and that is the proven method over time to make money, to make a good return on your money. And this isn't the province of April Fools. Some of the smartest people in the world have got bought into some of these schemes. For example, Sir Isaac Newton in the late 1600s bought into the South Sea bubble and lost all of his fortune. So it's not the province of fools, it's the province of very, very intelligent people, but it's this illusion we have about investing. So, with your money, don't speculate or gamble with it. Put it in a well-diversified, well-allocated mix of fixed income and stock market funds, rebalance quarterly, and be patient, and you will do well. Until next time, this is Paul Drinko.